Here on the Transparent FX Academy, every day I share my best market breakdowns, showing you guys how you have to analyze the market both from a technical and in order flow perspective to see where you can be looking for the next potential opportunities in the forex market. So without further ado, let's go straight to the charts and see which is today's pair. In today's video, I want to speak about NZDUSD, a quite interesting pair at the moment for a potential opportunity. So as usual, the way in which I will be structuring the video is first analyzing this market from a technical perspective. Then we will go and see what we have from an order flow perspective by checking the commitment of traders, which is basically what hedge funds, so the non-commercials in the market are doing. And by the end of the video, by using a combination of our technical and order flow analysis, we will try to understand where we have the highest probabilities for a trading opportunity on the pair. Now, starting here from the monthly time frame, what do we have? Now here in the monthly, we have a market which has just provided a nice impulse to the upside, followed by this correction. Now in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has just retraced exactly to the 50% of the Fibonacci taken on the impulse leg before then starting this rejection to the upside. Now, a quite important thing to notice is that this 50%, if we extend it to the left, we can see how it was lining up with this previous resistance, which now that the market has broken it to the upside is turned support here. So basically this area was a quite strong confluence of support, which the market has just tested and started to reject to the upside. So here in the monthly, everything seems quite bullish and we can expect more continuation to the upside. Going down on the weekly time frame, what do we have? Now here in the weekly, we can see that we have a market which has just provided a strong impulse to the upside, followed by this correction. Now, important to say that in all this impulse to the upside, there is one candle which is not related to the move, which is exactly this red candle here, meaning that now that the market has broken above the zone, and obviously it has already gone for a retest of this level, this zone is now acting as demand and support. And the market, in fact, has already started to reject the area to the upside. So at the moment, monthly and weekly are both indicating for a potential continuation to the upside. The only thing that is standing in between the current market price and the market going higher is the resistance that we have all across this zone here. In fact, this area here was acting as strong resistance here, again resistance here, and again resistance here, obviously, as the market has already tested and started to slightly reject the zone to the downside. So at the moment, everything is quite clear. Let's go down on the daily time frame and see what we have from a daily perspective. Just a quick thing, make sure that you like and subscribe, and also let me know in the comments the topic that you will like in the next video. Now here on the daily time frame, price action is quite clear. Now I had spoken about NZDUSD after the market created this overextended W formation here. When the market was at this level, I made a full breakdown explaining all the reasons for which, from here, we expected the market to provide this move to the downside to complete the pattern at the neckline at this previous resistance turn support. And in fact, that is exactly what the market did. And by the way, I will link in description this previous analysis so you can go and check it out for further reference and more free education. But this is in general what you expect. After the creation of an overextended W formation, you expect the market to provide a move to the downside to complete the pattern at the previous resistance turn support. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has just retraced exactly to the 0.618 of the Fibonacci taken on this daily impulse. Now, why has the market retraced exactly to this 0.618? Because Basically, this was the Fibonacci level that was aligning the best with structure, specifically with this previous resistance turn support, meaning that the market here on the daily time frame has just tested a strong confluence of support and has already started rejecting it to the upside. And we can expect the market to provide more continuation to the upside to basically complete this impulse correction and impulse pattern to the upside, and for the market to provide possibly a higher high. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are currently doing in the market, what we can see is that lately with the last reports, net positions have been increasing. In fact, we went from having 2.5k net positions all the way up to having 8.5k net positions, with longs increasing from the 18.9k that we had here all the way up to 24k, and overall short positions remaining the same. So NZDUSD has more or less remained the same all the time. From a short perspective, however, at the same time longs got increased, and that is why net positions are increasing. So overall NZDUSD is getting more bullish from an institutional perspective, meaning that we can expect the market to provide a move to the upside and complete this impulse correction and impulse pattern to the upside. However, we have already seen that on the weekly we do have some supply and resistance, meaning that if we are to be looking for this longing opportunity anyway, we have to be quite careful. And as usual, how we will be approaching a situation like this. With students, we will be reactive and not predictive. Monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. And from a directional perspective, we have identified the higher probabilities for a move to the upside. However, when it comes to the confirmations and entries, the best timeframes are the 4-hour and the other intraday timeframes. So with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from a 4-hour and lower bearish market as we have right now to a 4-hour and lower bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding NZDUSD to our watch list. And as soon as the market will provide to us one of our valid entries, only at that point we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside and for the market to provide a higher high. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also click the link in the description that brings you to the mentorship program. It's a very complete program. First, you learn all the rules of my rule-based strategies, and then you trade the strategies with me. Every day, I give you a new daily market breakdown showing you how to apply the strategies with the entry stops and take profits. And you can also ask questions and get the answers the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.